What's going on, everyone? So happy Friday. Finally, we are here. This is a week that we would love to forget, and the markets are closed over the weekend, so we are extremely thankful. So let's just go through what happened this past week. And boom goes the dynamite. CPI numbers came out. They were much hotter than expected, showing inflation is no longer just sticky, it is persistent. And it just simply means that the Fed has an issue on its hands. The projection of 3 potential rate cuts for 2024 has already been pushed out to now possibly 2. So that is a major change with regards to what traders are anticipating the Fed move might be. And now they were anticipating maybe the first Fed funds rate cut being in June. Now that's been pushed to possibly July and September. Who was talking about July at the end of last year? Unfortunately, yours truly. I hate when I'm right about stuff that's negative, but when the government is spending money like it is, it's crazy. We have $34 trillion in debt, and you have a strong jobs market. You just have too many dollars chasing too few goods. And based on pandemic behaviors, you can also see that although consumer sentiment numbers came out this past week and they were a little bit lower, they're still very optimistic as far as the consumer is concerned. It seems like it's going to take a little bit more persistency with what people are paying, whether it's at the grocery store, what they're paying for their goods and services, in order for this ship to change. And as we're heading closer to that election cycle where we're going to start seeing all that negative advertisement, we are going to be riding these higher interest rates for the rest of 2024 until we get through the election. And I can't quite figure out if it's going to be persistent for the rest of 2024. I'll get back to us next month after the first 2 weeks in May. I think that's going to be a good indication. But as you are heading into the weekend, make no mistake about it. We are all at or above the 7% interest rate range for a 30-year fixed. The only one that's really just below it that I could squeeze out with a 785 FICO score is if you were right at the top end of a conforming loan limit of about $765,000. So everyone's basically now playing with great credit, and that's jumbo, that's conforming. You are in the 7% range. When we see that, simply because the 10-year Treasury market went above the 4.5% mark. We haven't seen rates move this quickly, which they did on Wednesday, in decades, right? The market moved very violently due to that CPI number, and it was not in our favor. So heading into this weekend, again, I wouldn't talk about interest rates. I wouldn't act, though, like the elephant's not in the room, because it is. But I would be talking about the anticipation of appreciation as you're moving forward, right? Down the line in 2025 and 2026, I'd be talking about opportunities now for negotiation if you're a buyer. And if you're a seller, you need to understand that, and you need to be going into that marketplace, offering 1-1 buy downs, getting creative with your financing. And also on the buy side that I'm going to touch on probably more Monday, now is an amazing time if you can afford the payment to start using the bank's money in your favor. With anticipation that down the line you're going to be able to refinance, now's a great time to be using the bank's money. And I'll explain more on that later. You have any questions over the weekend? I'm always working. It looks like it's going to be beautiful, right? We're going to try and get out there, kick tires. We're going to be showing houses. Look, stay positive. Real estate goes through cycles. There's always opportunities. And always remember, the best time to buy or sell your house is when your client is ready. That's their right time. It's when they have an absolute need and not a want. When they are ready, that's the right time. Doesn't matter about the market conditions. Happy selling out there. Have a great weekend. I'm around. You give me a call. Talk to you soon. Cheers.